Hey guys, happy Monday, September 30th, 2024. In this video, I'm going to go over with you the 8K released by AMC Entertainment today. Notice that they are paying off another $153 million in debt. In this video, we will go over the updated debt table, talk about the details of this particular transaction, and think about some of the why. Why did they choose to use both shares and cash to pay off this debt? If you're interested in learning about that, stick around. Let's get right into it. Just a general reminder, nobody pays me to talk about AMC or any stock. Nobody's promised me anything. Everything that I cover on my channel is my own DD, my work, my research. You can like it or not like it. I'm sharing with you my reasons of why I am trading this stock. And this is a speculative stock. It might not be right for you, but I do my best to provide you guys factual information, free from the hype, free from the hate, and free from the conspiracy theories. You make up your own minds what to do with your investments, please. Let's begin by looking at AMC's debt history, because I often see on social media people saying AMC has never paid off any of their debt. They're never going to reduce that debt. And we can see here that from the peak of over $5.8 billion, AMC has now paid off over $1.6 billion in debt, with today's news putting the total long-term debt just over $4.2 billion. And yes, there is still some work to do. And you probably know, if you're paying attention, listening to management or reading the 10Qs, that one of the company's stated objectives is to continue to attack the debt and repair the balance sheet. So please keep that in mind as you're trading this stock. Looking at the specifics of this 8K today, we have $153 million of debt paid off between August 5th and September 30th, 2024. Privately negotiated agreements consisting of $15.6 million of the 5.75 subordinated notes due 2025. We're going to look at this in the debt table. It'll all make sense in just a second. $9.5 million of the 5.875% subordinated debt due 2026, and about $128 million of the 10-12 PIK toggle notes due 2026. This debt was paid off with a combination of stock and cash. So we have $103 million worth of the cash used to pay off the debt, and just over 11 million shares. And if I do the math and you're wondering what is the price that they got for those shares, it was right around $4.50. Since July, I've done one or two videos for you guys going over the restructuring that they did in July. I've updated this table with today's news. So we have a new tab, and the debt that we are looking at is the one highlighted in pink that got paid off. So the 10-12 PIK toggle, that was one that they took a big chunk out of. I have been telling you on this channel that that is the main one that they are going to be attacking. And if you're in my Discord, you know that I've been telling you almost every day, expect more debt for equity exchanges to knock this out, get it down to zero as quickly as possible. So today's news, if you're in my Discord, certainly was no surprise. In June, we had $788 million on the 10-12 PIK toggle. With today's news, it is now knocked down all the way to $146 million. The other two that they attacked was a little bit of a surprise to me. The lower rate subordinated notes due 2025 and 2026. You can see over here in my notes that I had said my assumption is they were going to wait to pay those out at maturity because the amount is so small. We'll talk about why they might have attacked that today in just a minute. But with today's news, the amount due on the 2025 notes is $82 million from $98 million back in June, and $42 million due on the notes that were due 2026, the 5.875% senior subordinated notes have been knocked down from $51 million to $42 million remaining. That gives them a total of 4.249 by my calculations, 4.29 billion still remaining on the long-term debt. And you can see the maturities over here. The ones that we're really focusing on are the ones that have the maturities coming up soonest, which would be the 2024, 5 million, 2025, 82 million, 2026, 42 million. And up here, this is the one that the lawsuit is about. the remaining amount of the secured term loan, $800 million due 2026. And we'll just have to wait and see what AMC and the lenders work out in the court system, how they're going to take care of that. And if things keep improving in the industry, box office continues to grow, AMC posts a few quarters of positive net income, then working that out becomes a lot easier. A lot more options open up to AMC as the financials improve and as they attack this other debt. Things get a lot better. More opportunities to restructure debt, get a better credit rating, and get lower interest rates. Whether it's getting lower interest rates or attacking the debt like they did today, everything that they are doing reduces the amount of interest expense on the income statement, the expenses that the company has to pay every quarter. So although, yes, this is burning cash, and yes, this was some dilution, 11 million shares, the company is focused on what the company needs to focus on. They're not worried about your shares. Remember, they're focused on getting the balance sheet fixed. And that is something you need to be aware of if you choose to trade this stock. One of their primary objectives is to prepare the balance sheet while they're waiting for the box office to grow. And hopefully everything starts balancing out in 2025 or 2026. And we'll talk about the box office tomorrow. Today is the last day of the quarter. We'll get the final Q3 box office numbers in the morning. And I will put a video out tomorrow letting you guys know my expectations of what I think AMC is going to report for positive net income for Q3. Looking at how the bonds are trading in the bond market right now, here is today's Bloomberg terminal screenshot. You can see the maturities in the middle row with the most recent restructured debt at the bottom of the table, those with the 2029 and 2030 maturities. And on the far right-hand side of the column, you can see the price that these bonds are trading for out in the market right now. And one thing that I want to continue to point out is these bonds are pretty much trading at or almost at par value, which would be 100 if you're not familiar with the bonds. Why does that matter? Why do I keep bringing this up? The bond market is kind of like your canary in the coal mine on bankruptcy risk. You guys know when company is facing bankruptcy or has bankruptcy risk, the value of the bonds plummet. And what we are seeing here from the bond market is the exact opposite. The bond market does not appear to be worried about bankruptcy. So again, for all of the negative Nancy's and the popcorn project folks out there telling you this company is under imminent threat of bankruptcy, I'm going to tell you again that the bond market prices are saying otherwise. Now, certainly things could change. You need to keep up with what is going on with the company, but this is the data we have from the bond market today, and the data speaks for itself. I know some of you are probably wondering, why do companies do private transactions? And AMC says in today's 8K that they've been working on this since August 2nd up until today. And so let's take a look at the 10-12 pick toggle price chart and the history of how it's been trading. Look over to the far right where it says July 31st. You'll notice that those bonds were trading around 90 cents on the dollar, and then the price started going up. That was probably AMC doing some open market buys on those bonds, getting them as cheap as they could. But as they're doing those buys, that in effect drives the price up because that is demand out on the open market. And then once they hit par, then there's really no advantage of them doing the open market buys. And they may have just said to someone, hey, we'll take those off your hands for par. I don't know the exact details of how it went down, but we can make some educated guesses like that by looking at this chart. And also once that 10-12 pick toggle hit par and the advantage of buying them out in the open market was diminished, they may have said, hey, let's go now instead of that 10-12 pick toggle, and let's also attack some of those lower rate subordinated notes, the ones that are due in 2025 and 2026. The other two that were in that table I showed you at the beginning of this video and that AMC talked about in today's 8K. Looking at the chart today, the market took today's news in stride, even though it was a little bit of dilution, 11 million shares. Stock traded as high as $4.69 today, closing at $4.55, up just over 1%. The market knows that AMC is working on reducing the debt, and they know that reducing that debt improves the viability of the company. And the market also knows that box office is looking pretty good for Q3, and that Q4 is going to be as good as or better than Q3 based on what we know. So good news is we didn't get chopped down on price today. If you have any questions about today's video or the 8K from AMC announcing that payoff of debt today, be sure and leave me a comment down below. I will do my best to help answer any questions that you have. Tomorrow I will have a spreadsheet available for you with my estimates for Q3 based on the box office numbers that we will get in the morning. And I do expect it to be a positive net earnings for AMC, despite what the analysts are predicting, which is a negative quarter. My spreadsheet, my profit and loss analysis is telling me that it's going to be a positive number, and I'll go through that line by line with you, and then you can pick it apart, and we'll see in early November from AMC what the official numbers are. Thank you for watching, guys. I am Tony Denaro, and I will see ya on the next video.